Good morning, guys. It's 9:42 on Wednesday, the 21st of February, 2024. And I thank you for joining me if you have live. Um, this is year one, week 46 of what will be roughly an 8-year fire journey. Looking at basically attempting, I suppose, to prove the financial independence retire early methodology, if you like, um, by way of the S&P 500. So it's basically the same formula suggested by J.L. Collins and others. Well, actually, he might disagree there because, in fact, I'm solely investing in the S&P 500, whereas, if I remember rightly, he suggested that your best option was actually a mix of shares and then counterbalanced, if you like, by bonds. And I think the ideal mix was reckoned to be 60-40. That mix was calculated, if you like, by I think he was a mathematician. I'm not sure he was a statistician. A guy by the name of William Bengen. You can actually, I think you can find his details on the website if you go and have a look for it. Under the resources section, you'll find the link to the website in the About tab on the YouTube channel. But guys, coming back to the here and now, as you can see, the market is open. There is a tiny little bit of red at the very end of the meteoric rise there. And actually, to be quite honest, it's almost a relief to see that at this stage, because the way the market was climbing back out of recovery there just was looking as if it was maybe pushing the envelope a little bit. But it's nice just to see just a little check on things, just to make sure everybody's still happy that that is fair market value today. And I would say, by the look of the size of that candle, that is probably fair comment. And as you can see, we've had a couple of others actually along the way at roughly similar intervals as well. No harm in that at all. None at all. The trend continues upwards. As you can see, if I bring the sort of the climb, if you like, if I shorten that axis a little bit, this is the historical trend line. So projected on out, I'm going to say that I think, roughly speaking, fair value today, I would estimate, if nothing had happened in the market, I would estimate it should be at around about £92 at present. Currently sitting at about 74, so as you might say, there is largely room to be made up. Looking at the figures so far, current portfolio value just over 13,500. So remember, we're coming close to 2 years of investment, but we're not quite there yet. Current return on investment is just over 15.5%. Now, you have to bear in mind that that figure would be substantially higher if we were not continually adding money in each week. And what I mean by that is, whenever we add in money, we necessarily shorten the distance between the average price and the current price, because we have made another transaction. And each time you make a transaction, at least on the buy side, I suspect it's the same on the sell side, but I haven't calculated it, so I'm not going to say that. But at least on the buy side, each time you make another transaction, there is a degree of what you might call dollar cost averaging, or at least that's how it's usually referred to. Pound cost averaging, if you want. It's basically the same thing, where any difference between the average price and the current price is shortened slightly by the fact that you have made a further transaction. So yeah, as I say, 15.5% roughly. I mean, even if you just look at the figure for a year there, it's more like 18, 19-ish percent. And without the transactions every week. Obviously, if we hadn't continued to invest every week, you wouldn't have this amount in. But just to say that the actual return on investment is influenced by the fact that we are still in the growth phase, if you like, of the portfolio. So we are constantly adding to it, and that affects the figure for return on investment. In terms of the figures at the bottom here for the day so far, we are just up slightly, not even 1/5%. Compared to this time last week, we are down 0.5%. And for the month, for the month overall, up 4%, which actually is a lot. 3 months, almost 9%. 6 months, about 15%, which is more than you would expect in a year. So this is a recovery period. And as I say, for the year, about 19 there. But as I've just said, this is a recovery period. An average year in the S&P 500 over the space of about 40 years has been shown to give a little over 10% per year. Yeah, this is not unexpected, but it is as a result of the market not performing as expected for a good year, from say around about here to here, maybe even more than a year. So basically the market is now kind of the market is now kind of trying to get back to where it should be, I suppose. Let's have a look at the notifications. So HSBC, the bank, down 7% as profits sink after $3 billion write-down of stake in Chinese bank. No doubt you'll find something about that if you go and look it up on Google. Realty income, this is just the biggest stocks before earnings. Realty income, Teladoc Health, SolarEdge Technologies, Medifast, Medical Properties. Nvidia down 6% ahead of an earnings release. Walmart up 5.5% on strong results and largest dividend increase in a decade. Vizio up 15% as Walmart agrees on $2.3 billion acquisition for ad business growth. DFS Discover Financial up 15% as Capital One sets for $35.3 billion all stock takeover. Volatility on Barclays up 4% on major strategic overhaul and plans to return £10 billion to shareholders. I'm not going to go into the history on Barclays, but you can look it up. Walmart, Medtronic, Home Depot, Transocean, Barclays' biggest stocks before earnings. Currys up 37% as JD.com and Elliott Advisors enter takeover battle. I'm not sure if that's the same Currys that I'm thinking on. There is Curry's, the retailer, in the town here locally, and they had absorbed Carphone Warehouse. I discovered that the last time I was looking to renew my mobile phone. In all honesty, I did go to Curry's. I had a chat with the guy behind the Carphone Warehouse counter, and quite honestly, I left again without making any purchases. My latest mobile phone I got from Temu. It cost just over £100, and quite frankly, as far as I can see, Wiko appears to be every bit as good as an Apple phone. Certainly the camera quality on it is absolutely astounding. Even in low light, it gives a good picture. And it does everything I want it to do that I have tried to ask it to do so far. As I say, it's a Wiko phone. I'm not sure where those are made, but fantastic job, great battery life, and quite frankly ticked all my boxes in terms of mobile technology. And just to talk about the other side of the story, I currently have a mobile SIM-only contract with Three. It costs me just over £6 per month, which gives unlimited calls, unlimited texts, and only 1 gigabyte of data. But I have to say, although that does restrict me a little bit, sometimes in around the third week of the month, or maybe I should say the third week of the billing cycle, sometimes I'll get a little text message to say I've used 80% of my data allowance, or even all of it. So it's a little bit restrictive for me. I could do with a bit more data than that. But on the other side of that, when you have Wi-Fi at home and you have Wi-Fi in work, I don't understand why anybody would feel the need to be paying for unlimited data. Certainly, I don't need it. So when it does come due to renew or whatever in 3 or 4 months' time, I will look to increase the data allowance, but not significantly. I think if I had 5 gig, that would probably well reflect my usage on more. I may be able to be tempted to go to 10 or another step up, so to speak, just to absolutely cover myself for any particular eventualities where I would be in a situation where I might want to use a bit more than that. But for the most part, 5 should be largely sufficient, and as far as I can see, I can get that currently for around about £7 a month. So you can you can do the math on all this sort of thing. Previously, just to put this into context, previously I used to buy the cheapest touchscreen phone out of Tesco's, and the last couple of times that I had bought a phone, they were Alcatel's. Nothing wrong with Alcatel, I have to say. It's a make that has served me well for many years, and I think indeed the first phone that I ever owned was, I believe it was an Alcatel, back over in France on the SFR network. So yeah, it's a company it's a company whose products I've used for many years, and always pretty happy with what I got from them. The only thing that I can really say about them is just that I think maybe the build quality is perhaps do you know the way they say you get what you pay for? And I think to a certain extent with Alcatel you do. Although I had and have had my Alcatel phones for years, you do need to protect them. You need to put them in a case. I would say the same for any phone, even the phone I have now. Actually did come with a sort of a rubber case surrounding the back of it, which is brilliant. Actually, it fits exactly all the ports and everything. So provided with it, and it also appears to have a screen cover fitted to it as well. And I don't even think either of those were advertised in the advertisement on Temu, but they're there. And then in addition to those things that, as you might say, just sort of protect it from normal handling, I also have I suppose I would call it a holster style case, which I keep the phone in whenever I'm not using it, or when I'm not in the house and I have set it down. But yeah, I mean, as I say, the just in terms of the Alcatels, I was buying those for between £40 and £50 more recently. As I say, from Tesco, SIM free, and I was actually, I was actually really getting them for cheaper than that, even because I was using club card points. So I think there was one of them actually only cost me, in monetary terms, only cost me something like £12 or £15. So, as I say, the Alcatel served me well. At times they struggled a bit. I don't think the cameras on them were good enough, frankly, for today's world. If I can put it that way, they didn't perform well in low light. But as I say, I've spent roughly twice as much this time through Temu, and I am delighted really with the quality of the phone that I've been able to get for twice the money. It's nowhere near the price of an iPhone, probably nowhere near the price of even a second-hand iPhone, but it's a Wiko, it's a T3 if anybody's interested in those. As I say, just over £100 on Temu. Decided I was going to get it as a early Christmas present for myself. It has loads of memory. There's nothing that I have had to think twice about whether I want to install or not. I just install whatever I want to, and the memory has not even come close to being half full yet, which is fantastic. And I can tell you, I use some amount of apps. And if to give an example of just how little I've had to think about what I install on it, I have even installed a couple of games on it just for a mess about, even as much just to see how the phone performs with that sort of thing on it, and it has not flinched. It has been absolutely solid. So with all that said, guys, let's I don't even remember how I got onto that subject. I was talking about Currys, that was it. So Currys was up 37% as JD and Elliott Advisors enter takeover battle. Tenemos rebounds 7% after sell-off following Hindenburg Research's report. So I know nothing at all about Tenemos apart from... Sorry, it's not. I was thinking that was a Spanish word there. We have. It's not. It's temenos. So anyway, either way, I know nothing about temenos, and I know nothing about Hindenburg Research. So that means absolutely nothing to me. But they have bounced back anyway, 7%. And apparently this report hasn't done them any favours, or hadn't. But nevertheless, whether people haven't really believed the report or whether they feel that the sell-off was too steep, it's hard to tell. But some people have jumped in with their cash anyhow. So let's come out of the notifications, guys. Let's get on ahead, and as I say, the market is open. We're going to do our weekly buy. And if you've been watching the channel before, you'll know that each week we put in £120 worth of money, virtual money, using the Trading 212 practice platform. So £120 is going to buy us roughly 1.6 shares today, and we are buying the Vanguard S&P 500 exchange traded fund. Now, the reason we're using the Vanguard one, well, apart from the one that it's the most readily available perhaps on Trading 212, there may be others, I don't really know. J.L. Collins was a big advocate for Vanguard because, well, basically, historically and from an ethos point of view, I suppose Vanguard is one of the providers that keep their fees as low as possible. I'm trying to remember the name of the creator of Vanguard. It was a guy by the name of Jack Bogle, I think was his name, Jack Bogle. And he saw the benefit, I suppose, of exchange traded funds in terms of their ability to produce good returns dependably well into the future, and he has been completely right. From everything I have seen to date, I think it's a fantastic way to invest your money, and yeah, so we have had our order executed there. We've got 1.6 shares of VUSA, which is the S&P 500 exchange traded fund provided by Vanguard. S&P, of course, one of the index providers, I suppose they are, in the US. So the current purchase price in around 74 and a half. And let's see, yeah, so the figures have updated on the right hand side. We're getting closer to the 14 grand portfolio value. I didn't actually look this time to see if the green line jumped or not. Usually, sometimes you can sort of see just a little move up the ways, just as the order executes. But honestly, my eyes were not focused on that part of the screen at the time. You may have seen it. I don't know if you did. Why not drop it in the comments? Did you see the line move? I'll have to go back and watch it again to find out if it did. But I don't know. That's the honest answer. So guys, that is pretty much it for this week. Actually, tell you what, just before I disappear completely, let me just bring this to your attention. This website is thelightpaper.co.uk. And the Light is what I would call a freedom newspaper. It's a newspaper which is published free online, and there are umpteen contributors to the Light across the country. As you can see, they talk about waking up your neighbours, the Light Recruit, and they are recruiting, bringing together recruiters and candidates whose values align. There is also the Stand in the Light Festival coming up pretty soon. I think it's at the start of the summer, in around May time. So if you're interested in that sort of thing, go and have a look at thelightpaper.co.uk. They're up to issue 42 now, and as well as being able to download the current one, you can also go back and read previous issues as well. There are lots of articles, good commentary. Sometimes there's the odd bit of speculation, a little bit of advertising. But yeah, on the whole, I think most people would find the light paper of interest. And I wholly encourage everybody to go and have a look it up, download the back episodes if the current one isn't enough for you. And with that, guys, I'm going to say thank you for watching today. I hope you enjoy the content, and if you do, why not give it a like, hit the subscribe button, and come back again next week for more. Thanks for watching, and have a great end to your Wednesday.